all to today's Jindalee Lithium Investor Briefing webinar. It's a pleasure to have you all with us. My name is Lucas Robinson from Investor Relations Consultancy Corporate Storytime. Jindalee Lithium is an Australian listed and headquartered lithium developer focused on one of the most strategically significant lithium projects in the United States, the McDermitt Lithium Project. At its core, the company is working to unlock what is one of the largest lithium resources in North America, positioning itself at the heart of a global critical minerals supply chain and at the centre of the US energy transition. Jindalee has recently announced the execution of a binding business combination agreement, or BCA, which is expected to lead to the listing of the McDermitt project via US Elemental Incorporated on the NASDAQ exchange. I'm delighted to be joined today by Rodger, Managing Director and Chief Executive Officer, and also Lindsay Dudfield, Executive Director of Jindalee Lithium. During today's live investor briefing webinar, Ian and Lindsay will be taking us through an overview of the company's recent BCA announcement and will provide a business update. Ian and Lindsay will be pleased to take any questions during the Q&A session following the presentation. If you are joining us live, today's webinar is being recorded, but you are welcome to submit your questions at any time during the webinar via the Q&A function at the bottom of your screen. If we are unable to address your question, we'll be sure to follow up with a response after the webinar. So without any further ado, I'd like to hand over to Ian to present the Jindalee Lithium story. Welcome.
Thank you, Lucas, and good morning, everyone, and thanks for joining us. As Lucas mentioned, my name's Ian Rodger. I'm the Managing Director and CEO of Jindalee Lithium, and on the call today is Lindsay Dudfield, our Executive Director and largest shareholder. As Lucas said at the top, last week we announced what I consider the most significant milestone for the company since we discovered the McDermitt project in 2018, and that's the execution of this binding business combination agreement to list our US lithium assets on the NASDAQ through a newly formed entity called US Elemental. So today I really wanted to walk you through what this transaction means, why we've structured it this way, what comes next, and then, as Lucas has mentioned, we'll open it up for some questions. Disclaimer, I'll let you read in your own time, but moving on to key investment highlights, really, before I get into the transaction, I really just wanted to briefly ground everyone on where we sit today. McDermitt is one of the largest lithium resources in the US, 21.5 million tonnes. It's located adjacent to the Lithium Americas Thacker Pass project. We completed a pre-feasibility study in the end of 2024, which outlined a very large-scale, long-life source of battery-grade lithium chemicals, and that's really positioned it as one of the most strategic assets in the US. As a result, we were one of the first 10 projects added to the fast 41 permitting route, including one of only 6 lithium projects. So really, that's a nod to the strategic importance, and we've similarly executed an R&D agreement with the Department of Energy, and importantly, reached a key federal permitting milestone last year with the approval of an exploration plan of operations, which is really key to unlocking the next phase of work, including a large infill drill program and feasibility study as a pathway through to final investment decision in a number of years' time. On the market side, we're really pleased with the improving macro backdrop in terms of lithium. Lithium carbonate price has more than doubled since the lows of last year and are approaching that incentive level. Essentially, every major US or bulge bracket investment bank, UBS, JP Morgan, Deutsche Bank, Morgan Stanley, they've all gone constructive on lithium with more bullish outlooks published over the last couple of months. And importantly, we're seeing battery energy storage demand really come out as a key growth driver. It's expected to grow 55% next year, and alongside the EV story, which is getting its second legs on the back of this Iran crisis, we're really set up for very strong demand growth over the next couple of years in the face of a very constrained supply side. So very positive outlook, particularly as we look to take this project and new company to the market in the US. So and the question has always been from investors to Jindalee, how do you fund a project of this scale at this stage in a way that doesn't destroy value for existing shareholders? And that's what this transaction we're going to talk about today is designed to answer. And before I get to that, I'll just quickly run through our corporate snapshot here. Currently, market cap is around 65 million. Clearly, we traded up a little bit since this slide data was pre-announcement on Friday. Lindsay, on the call, obviously our largest shareholder and associated entities hold about 20%, and clearly there's a mismatch between our ASX market cap and what we believe the fundamental value of the project is, and what value is ascribed to our assets through this transaction. And I'll get into this quickly on the next slide. So let me walk you through the structure of the transaction we announced on Friday. To recap, we've executed a binding business combination agreement with Constellation Acquisition Corp. They're a US listed SPAC corporation sponsored by Antarctica Capital, who are a circa $10 billion US institutional investor based out of New York. This is the binding agreement for the transaction we announced last year, which at that time was a non-binding LOI term sheet. And pleasingly, all commercial terms are consistent with that original term sheet. In simple terms, the way to think about this transaction, which admittedly is somewhat complex, is need to think about it as a spin out. In essence, Jindalee is spinning out its US assets into a NASDAQ listed entity called US Elemental Inc., or a to be listed NASDAQ entity called US Elemental Inc. High-Tech Minerals, which is currently, as you'll see on the slide there, High-Tech Minerals, currently our 100% owned subsidiary and Nevada registered company, merges into US Elemental and survives as a wholly owned subsidiary beneath it. So US Elemental becomes the listed holding company on the NASDAQ, with Jindalee to retain ownership in that US Elemental entity as our core asset. Under the agreed terms, Jindalee will receive 50 million shares in US Elemental at a value of $10 per share, implying an equity valuation of US $500 million for our US lithium assets. That represents clearly a substantial premium over our current ASX market capitalization and serves as a basis and reference point around which the capital is expected to be structured. Specifically, the transaction contemplates a capital raise of $20 to $30 million via a PIPE, which is for Australian investors, that's the acronym's a private investment in public equity, and it's inclusive of that $4 million cornerstone commitment from Antarctica Capital, which was signed in parallel to the business combination agreement, of which we've received $1.5 million upon signing on Friday. And that's come in as a preferred convertible structure. Again, in simple terms, this is effectively a convertible note that is only convertible into US Elemental equity during the period of between now and close. If the transaction is terminated, that's treated as a normal note and will be sort of repayable to Antarctica. If the transaction is successful, that note will go with the new entity and be convertible into US Elemental shares, as sort of outlined in our announcement on Friday. A couple of key points on this slide is we've been working with Cohen and Company on this strategy for 12 months. This isn't something that's come out of the blue. It's something we've spent a lot of time unpicking. They are deeply experienced in the critical minerals de-SPAC market, in particular, having closed a number of similar transactions for pre-production critical mineral companies and raising substantial capital in the process, as you can see on the slide here. That track record, combined with the strong investor interest we've had from the early marketing, including the non-binding term sheet for a US $100 million equity line of credit from L1 Capital, really gives us confidence that we're able to execute on this transaction, be able to raise the capital required to complete the transaction as anticipated. Probably the final 2 points really is at completion, Jindalee is expected to retain a majority interest of circa 80% or more in US Elemental with majority board representation. We remain the controlling shareholder with full strategic oversight of the project, and Jindalee and Antarctica sponsor shares will be locked up for 12 months following the completion of the transaction, and that's another feature. This transaction is aimed at raising the capital to progress McDermitt, which I'll get onto in a couple of slides' time, but it's not an immediate liquidity event, and we're committed to seeing this project progress through feasibility stage. This slide lays out the illustrative pro forma capital structure. In high level terms, the pro forma assumes 100% redemptions from Constellation's public shareholders, which is consistent with recent de-SPAC experience. What that means is that the capital into the new entity will come in via a pipe rather than through the SPAC trust. The minimum cash condition of 14 million US net of certain transaction expenses, as outlined in our announcement, is expected to be met and potentially exceeded by that contemplated pipe raising that I talked about earlier, including Antarctica's binding commitment. On a pro forma basis, we're looking at about 58.6 million shares at $10. That gives a pro forma equity value of around 590 million. And obviously, the enterprise value calcs are there that net off the assumed capital raise, which gets to 570 odd million dollars enterprise value. Well, the breakdown of that pro forma capital structure on close is going to be subject to the final terms of the financing, etc. But based on the assumptions on this slide, we'd hold under these assumptions 85%. With the sponsor holding about 10%, and then the pipe investors holding the balance. Clearly, the reason we've guided to the 80% level is that we've got a cornerstone commitment from Antarctica, and we're actively engaging with US pipe investors at the moment, and ultimately the terms of that will ultimately dictate what the actual capital structure looks like. But we expect Jindalee will retain 80% or more. As mentioned on the previous slide, the capital raise will be structured with reference to that $500 million equity valuation, similar to that initial commitment from Antarctica Capital, and that's fundamentally a different starting point for pricing than raising capital off our current ASX market cap. So why are we doing this? I've probably covered some of these points, but let me reiterate the sort of 5 key driving areas for us to do this transaction. The first and foremost is access to capital. US capital markets have demonstrated a clear appetite for pre-development critical minerals assets, particularly ones that are onshoring or friendshoring elements needed by the United States. There's some data in the bottom slide there, but MP Materials, USA Rare Earths, Critical Mineral Corp, and even Eagle Energy Metals, which is a uranium project located adjacent to us in Oregon, all have raised substantial capital through this de-SPAC process, and pleasingly, the majority of them have raised significant funding on follow-on funding, given the demand from investors. We think we're very well positioned, being one of the largest and more advanced lithium deposits in the US, and it's a rare asset for US institutions, seeking scale and exposure to domestic supply. So that's really the first and headline point. The second point related to that is around accelerating the next phase of development. Clearly, we've taken the project in 2018 from an idea through to a large resource and a high quality PFS, but there's significant pre-development capital that needs to be deployed to de-risk this asset through to a final investment decision. This provides the funding to basically accelerate those work streams over the next 24 months towards a final investment decision. And it's a less dilutive pathway to raising that capital than if we were to achieve the same quantum of capital through our current ASX listing. Third is government support. I won't dwell on this. We spoke about the Fast 41, but there's about $11.8 billion appropriated through the One Big Beautiful Bill. We're actively working. People who follow our sort of social media, etc., know that we've been in DC a number of times over the last 6 to 12 months. We're actively working on a number of opportunities there. Too early to provide any comments on those, but there's a huge opportunity set there, and we think this US listing will just increase the menu of options available to us in that regard. The fourth point really is around Jindalee shareholders retaining upside. We're all owners of the business. Part of the rationale of this transaction is to protect our capital base, and providing a high level of retained ownership really provides some flexibility on the near term, provides a platform to raise the capital, but over the longer term, it's an opportunity, as we get through key milestones, for ability to for liquidity over the medium term. And fifth and really key point is timing's everything. this isn't an accident. Lithium is entering into what UBS calls the third major upcycle. BES demand is surging. EVs are getting the second wind, and the supply response is struggling to keep up. We've got all major Wall Street banks re-rating the sector, and our advisors are very optimistic around how this will be received in the market. And clearly, the feedback we've had so far for our marketing has been encouraging, and we expect to leverage this positive momentum in the lithium space. In terms of catalysts and next steps, on the transaction side, we're targeting Jindalee shareholder approval in second quarter of this year. With important to note, as part of the transaction, Lindsay has signed a voting intentions agreement with him and associated entities to vote in favour of the transaction, and with a view that achieve that time frame. Critically, the US filing document, which is in Australian terms is essentially the prospectus for the US, is expected to be submitted in similar timing in quarter two, which aligns with a listing in the second half of 2026. Current timing, current schedule looks somewhere on the order between Q3 and Q4. The long pole in the tent will be SEC review of the said filing document. So it's that's why we've guided half two, because we've got a handle on the things we can control, but the SEC review time period is likely to be the constraining factor there. Like I mentioned, we don't anticipate any issues on. The deal is contingent on our shareholder vote, which I've touched on, but also the SPAC side as well. We don't anticipate any issues on their side, given that the SPAC sponsor controls the SPAC and has signed a support agreement in relation to the transaction. So we have a high degree of confidence we'll meet those, and we've spent a lot of time navigating the listing requirements in the US and have a sort of credible plan to meet and address all of those. In terms of the project side, the magnesium test work that we've previously spoken about, we expect results around the middle of the year. There's some work that's already underway and more that's kicking off in the short term, and we expect that this could be a material value catalyst in its own right. All previous work done on the project has been on lithium alone, so we think this could materially reduce unit costs, potentially reduce overall unit costs, as well as increasing the top line revenue. So we're pretty excited about this, but the devil will be in the detail of that test work, and we expect to have some news out around the middle of the year. Clearly, the biggest work program this year will be what we're calling the phase one drilling program. It's phase one because it's phase one of the exploration plan of operations drilling. That's a really significant infill drill program at McDermitt, aimed at increasing clearly geological confidence, but also providing sample for metallurgical piloting, as well as additional baseline data required for the key permitting steps ahead of us to get to a final investment decision in a number of years' time. So part of that is time to coincide with the close of this transaction, and that the proceeds from the pipe raising as part of this transaction is expected to fund the majority of that work stream, with Jindalee sort of not having to fund any further work streams post completion. From 2027 onwards, we move into, as I said, pilot test work, plan optimization, continued community and tribal engagement. We'll obviously be building out the owners team and commencing opportunity assessment for the future growth pipeline in parallel. From the company side, a lot of work's gone into this transaction. We think the structure in place has potential to create a lot of value. Our shareholders retain majority ownership and control of what we believe is one of the most significant lithium assets in the US. And I'd sort of really make one observation. There remains a fundamental disconnect between the US $500 million equity valuation implied by this transaction and our current market cap. And even after the share price appreciation the last couple of days on the back of the BCA announcement, clearly the market is not yet pricing in completion of this deal. And while we'll be the first to recognise that completing this transaction is not without its risks, we have taken a fair bit of time to work through this structure carefully, and we have a high degree of confidence we'll be able to get there. And so I guess as the opportunity set is, as we continue to de-risk that transaction through the capital raise and in the SPAC and the regulatory approvals, we expect that valuation gap to converge, and we think that really represents a clear opportunity for investors, particularly given the backdrop of an improving lithium market. So with that, maybe I'll pass to Lindsay for any closing comments, and then we can get into some Q&A.
Yeah, no, thanks, Ian. Look, clearly it's a major milestone for the company. As Ian said, the short-term driver is to provide the funding to complete the feasibility study without having to go back to Jindalee shareholders and tap them again. Obviously, in the medium term, the US market is going to be far more supportive of a US project, critical, strategic US project than probably the ASX and very deep pools of capital in the United States for these sorts of assets. Obviously, the transaction, as Ian said, there's a huge value disconnect between where Jindalee's market cap and the implied value of the project by listing it on a US exchange, the NASDAQ. So if that value is maintained upon US elemental listing, there should be a significant uplift in the Jindalee share price to catch up and close the gap. So look, we see, it's not without risk. There's always a completion risk. There's market risk, but we see the risks as being relatively low relative to the potential returns on this transaction. So I had no hesitation in agreeing to vote my shares in favour of the transaction, and we think this capital, assuming we US elemental lists, will add a lot of value to the project over the coming 12-18 months.
I think the audience certainly appreciates the value opportunity that you've articulated there. The first question I have is, can you clarify whether the company is targeting PIPE funding above the US $20 to $30 million range, and to what extent you're seeing capacity from institutional or strategic investors to increase that amount?
Look, the pro forma used in the presentation, obviously has a range 20 to 30 million, and it is assumed the 25 million midpoint of that, and then after discounting 10 million in transaction costs, etc., that leaves us with 15 million in US elemental to fund the work program that Ian's mentioned, the big drill out and the metallurgical test work and other studies. If more money is offered to US elemental, obviously the US elemental board, which will be controlled by Jindalee, will consider whether it's in the best interests of the project.
And I think I add is that the 20 to 30 is based on we've had, as part of the early marketing, indicative term sheets around that quantum, and just to reinforce that we've got the flexibility to make decisions that we think that are in the best interest of our shareholders around that capital raise. So, and
are there any relevant case studies for ASX resources companies going down the path of listing vehicles on the NASDAQ?
Yeah, I'll take this one, Lindsay. I think there is one. So there's an ASX listed company called European Lithium, which completed a very similar transaction, essentially listing their subsidiary on NASDAQ. I think they completed it early 2024, so a couple of years ago now. Similar, I think some of the metrics around that transaction sort of highlight the opportunity set here, although there's clearly some differences, but they're pre-production critical mineral assets, in that extent quite similar. But European Lithium, had a market cap at at the time of signing the business combination of around, I think, 130 odd million Aussie. They instead their headline equity number was sort of 750 million compared to our, say, 500 for their asset. And I think the stats since then really prove the value creation potential. They've sold, since listing, they've raised about 150 odd million US dollars into the new vehicle to, I think, to do a range of initiatives for that that NASDAQ was a company called Critical Metals Corp. And similar to us, they had customary lockups, but post sort of 18 months from the close of the transaction, they've been able to, basically through a partial sell down, a third of their initial starting position in their position in that NASDAQ listed entity, European Lithium, have been able to sort of liberate in the order of, I think it's 350 odd million Aussie through opportunity sell down, which has obviously generated liquidity into European Lithium, and they've been a net buyer of their own shares since sort of announcing the BCA. So that's clearly the opportunity set, shows some of the value creation potential. Obviously there's always differences in these comparisons, but I think it just lays out the context. What I'd sort of labour though is, from a Jindalee point of view, the near term, primary driver of this transaction is introducing less dilutive capital to get us through, a multi-year program. Any potential future liquidity is an opportunity set which this transaction allows to unlock, and isn't something that investors should expect in the near term.
Thanks very much. The next question is, does Jindalee have any US government grant funding currently submitted?
Oh, and you take that, Lindsay.
Thanks. Yeah, look, I mean, as Ian said, we've got grant applications in the pipeline, and we're working on several new opportunities that have become available in the last month or so. No guarantee that we'll be successful on those grant applications, but we're certainly throwing our hat in the ring. We think we've already got a relationship with the Department of Energy via our basically CRADA, the Cooperative Research and Development Agreement. So we're known already to certainly the Department of Energy, and also there's another potential bonus which Ian kind of touched on through having the project sitting in a US listed company, in that some of the grants that have been awarded recently have also involved equity component. So having US Elemental being able to offer some sort of equity to the US government in return for grant funding is another option that may or may not come into play. So there's certainly grants in place, but nothing that we can applications in place, I should say, but nothing we can announce at this stage. Yeah.
This question just in, but I think it's a relevant one. Currently, US investors have a choice between investing in Jindalee on the ASX at a sub Aussie $100 million valuation versus investing in US Elemental at a US $570 million valuation. Do you envisage that this may lead to Jindalee being viewed as a more attractive investment opportunity than US Elemental?
Yeah, look, it's a good question. I think fundamentally in the short term, yes, I think it's an opportunity set for investors looking to that for asymmetric upside. Clearly, we expect the valuation to converge over time as the transaction de-risks. What I would say is that the US investor sphere, a lot of them are prohibited from investing in sort of foreign listed companies, and in particular what we've found through our OTC and other things is that it hasn't been that efficient in getting access to US investors for a range of different reasons. And there's a premium for proper US listed entity and pre-development plays, which does speak to some of that valuation difference. So I think in summary, we think there will be some capital flows into Jindalee to look to capture some of that arbitrage value as we de-risk the transaction. But fundamentally, the investors that are going to fund, that we expect to fund the US Elemental, aren't the groups that can really make an investment in Jindalee. It's a sort of a different universe of investors from a simple perspective. So, Lindsay, I don't know if you add anything further.
No, look, I think you've covered it very well. As Ian said, there's quite a large group of investors are prohibited. Most US funds, for example, or different sorts of funds are prohibited from investing on non-US exchanges. So hence, I think, and also there's a lot of US retail investors don't really know or feel uncomfortable about investing outside of the US. They want to invest in their own time zone and in their own currency and have that immediacy. I mean, very similar to Australian investors. A lot of Australian investors don't like investing outside of the ASX. So we expect a much larger universe of potential investors via US Elemental.
Yeah. The NASDAQ listing mean that just under 20% of US Elemental stock will be tradable, and will any trading of Jindalee's holding be allowed?
As I sort of touched on in the presentation, both on the pro forma numbers, Jindalee own 85% of the entity, and another 10% odd will be held through Antarctica's what's called sponsor shares. Those will be largely locked up for 12 months following completion of the transaction, and that's designed to sort of protect the capital structure, so there isn't just sort of a wave of selling, and sort of indicates the belief of both parties in sort of the medium term value creation through this transaction, and so that speaks to the lockup. Any new investors coming in, including Antarctica, putting money in as part of the pipe, there won't be any restrictions on those. Any new incoming investors into the US Elemental and will not be subject to lockups. Similarly, there is through some of the nuts and bolts of the transaction, there's the ability for us to settle some of the intercompany loans and other things in shares, which again won't be on the same restriction, but the vast majority, as I've outlined, will be subject to that 12-month lockup.
And this may be our last question, I think. This week, the estimated permitting completion date on the US government's FAST-41 permitting dashboard was extended from March 30 to June 30. Why was this done or necessary? And what is the company's current actual expected permitting completion date? I know that's going to be difficult for you to answer with any certainty, that last bit.
Look, our understanding is that the permitting council contacted the state agency responsible for issuing the state permit. That's DGAMI, effectively the Oregon Mines Department. And on the basis of that, the response from DGAMI shifted it from the end of the March quarter to the end of the June quarter, and we've been advised that we should expect our DGAMI permits by 30 June to coincide with the commencement of the summer big summer drill program that Ian mentioned, which is the main reason for the short-term driver of this transaction to raise the capital to fund that big drill out. So
yeah, I think the only other point I'd add to that is our drilling window under our federal permits is from 1st of July to the end of November. So it's not expected, that slight slippage is not expected to impact our operation. We've got obviously active dialogue with DGAMI around those permits, and we fully expect that we'll have them in hand, and it won't be holding us up for the key program in the second half of the year.
Well, thanks very much. So that brings us to the end of the Q&A session. As always, if you have any further questions, feel free to email us at info@corporatestorytime.com. Ian and Lindsay, before we close, do you have any final comments you'd like to share?
I mean, I think the key point from from me is really that, there's still a fair bit of work to do to close out this transaction, but fundamentally, we've got a high degree of confidence we're going to get there, and there's sort of this asymmetric profile, and we expect there'll be a lot of potential value creation for investors between now and close, and we look forward to sort of delivering on this.
That concludes today's webinar. Thanks very much to Ian and Lindsay for your thoughts. On behalf of Jindalee Lithium and Corporate Storytime, thank you all for joining us, and we look forward to welcoming you to our next investor briefing.
I think